Hello and welcome to the GoNoGo Show here on StockCharts TV. My name is Tyler Wood, and I'm here with Alex Cole on January 5th, 2023. Alex, how are you, my friend?
I'm very well, thanks. New Year's begun.
New year has begun. How is it up there in New Jersey?
You know, it's kind of warm. It was 64 degrees yesterday. Today a little cooler. It's going to cool down this week, but there's a lot of rain happening around here.
Yeah, we had a massive cold front move through tropical Mexico. Got down to 82 yesterday, actually.
Wow.
So had to bundle up a little bit. Alex, let's dive into the markets and talk a little bit about what we are seeing from a global perspective across the asset classes, starting with our GoNoGo cross-asset heat map. What's this telling you this week?
Well, as you can see, we're still in that no-go on equities in the top panel. That strengthened a little bit these few days of this week. We talked about it a few times in our research that's gone out over the holidays. No Santa rally this year. The Santa rally, of course, is the last 5 days of the year and into the couple of the first days of the next year. And often there is a rally in prices in that last week of December and into January. And that statistically, if that happens, is good for January and for the rest of the year. So that hasn't happened this year. So we'll have to see what we need to contend with as January moves forward. But so equities still in a no-go. You can see that TLT, Treasury bond prices, have started to struggle and show quite a lot of uncertainty with the amber bars here falling out of their go trend. Commodities really chopping around again. They've fallen back to amber from the go. And of course, the dollar weakening in that no-go, but still in a no-go at the moment.
Absolutely, a lot of chop and rotation in this market as we're trying to get a directional view on where things are headed coming into 2023. Alex, let's move over to the S&P 500. Take a look at the ETF SPY, just to get an understanding of that price action and from a trend perspective. Starting first with the daily chart, as you mentioned, not being able to hold the go trend here into the new year. Talk to us a little bit about what's going on with the GoNoGo Oscillator in that bottom panel.
Yeah, so of course, anybody that's been watching our show or following us for a while, we know how important the zero line is with our oscillator. When a trend is in place, that zero line should act as an objective level that can be used as support or resistance. When it's first broken into the positive direction here, we see that it holds the zero line as this trend strengthens. And then, of course, when it doesn't, that was our first indication that this trend wasn't as strong anymore. We're now in a no-go trend. We've seen the oscillator move into negative territory, and now we're retesting the zero line from below. So, of course, if this trend is to remain strong, this no-go trend is to remain strong, then we will likely see the oscillator rejected by the zero line. And that'll tell us then that momentum is still in the direction of the no-go trend. Now, one of the things that we had on one of our notes that went out was a horizontal line that you can see right across this chart. If we sort of put it right around here, you can see how this level has been fairly important now for some time. We've support here, resistance, support, support again, and then it was broken. And now we've sort of gone sideways as we've found resistance back up near these levels again. So we'll need to see price above this level to be confident that this no-go trend is over. But at the moment, a low resistance, finding resistance at the zero line, and a strong no-go trend in place on equity.
Absolutely. And of course, as always, we recommend that all of our users consider multiple time frame approaches to their trading and investing. So let's bump this out from the daily view to that weekly view that has been so important through all of last year to understand that series of lower highs and lower lows that constitutes a downtrend by any definition. And we've been really stuck in this no-go trend condition on that longer time frame basis. So understanding that primary trend of the market to the downside helps us understand those points of inflection at the daily timeframes and shorter. So talk to us a little bit about where we're at on a weekly basis, Alex.
Yeah, well, it's not easy because we're at a bit of an inflection point on the weekly chart as well. Like you said, definitely the prevailing condition is a no-go. We are seeing these lower highs and lower lows. but we're struggling around the zero line on the oscillator, and we saw some uncertainty even in the trend indicator here with this amber go fish bar. So the no-go is still in place. This became a lower high. You can see how it was a lower high than it was before. But the oscillator struggling around the zero line, sort of trying to break into positive territory, coming right back to zero. So this no-go trend now to continue is going to need to set a lower low than here, which of course is quite some way lower. So we'll see, we'll need to see, I guess, if the oscillator is able to make a decision on whether or not it's going to get rejected and go back into negative territory, which would support the chance of further price movement down, or if this time it rallies and stays above zero, which would indicate some positive news for people looking for a change in trend.
Absolutely. As the great John Murphy has shown us in many books and lots of great research published here on StockCharts, we have to look at an intermarket perspective to understand what's happening in equities. Towards the end of last year, I got the great privilege to talk with Urian Timmer and with Tim Hayes, two incredible CMT charter holders and great macro analysts as well. And a lot of the information that they're working with to develop a thesis on where the markets are headed here in 2023 has to do with these intermarket interactions, so across the asset classes. Alex, let's turn over to the TNX, the 10-year Treasury yield. You mentioned bond prices struggling a bit, and we're seeing that fresh go trend in the TNX, in the yields, causing some headwinds here for equities again, even though we saw a bit of respite towards the end of 2022. So on a daily basis, if you don't mind jumping down a time frame, let's start there.
Sure. Yeah, so this is the daily time frame for TNX, and you can see that chop that you were just talking about. We'd seen this relief with rates coming off and with the no-go trend in rates lasting for a couple of months. You can see how the oscillator wasn't rejected by zero, broke significantly into positive territory, and that caused the go-no-go trend indicator to paint a couple of amber bars, a couple of go bars, and then this week has come back again to no-go. But now we're in an interesting spot where the oscillator is now approaching the zero line from above. So we're going to have to see if this finds support that could allow prices to maintain these levels and perhaps even stabilize or move higher. If the oscillator moves really quickly back into negative territory, then we'll see this no-go perhaps continue. But you can see even today that we are in an amber bar again. So lots of uncertainty in this area, but momentum definitely at the moment looking for support from above the zero line.
Absolutely, and we've tracked that inverse correlation certainly throughout last year. It was a very powerful relationship. When Treasury yields are rising, we see that as a pretty strong headwind for US equities and equities globally. So we'll be looking to see if that no-go trend can hold and we can push that oscillator back to the downside. Alex, let's take a look at the dollar. UUP is the ETF we use as a proxy for the dollar index. We saw that continue a no-go trend as the oscillator was rejected at the zero line here at the start of the week. But now let's catch up to where we are at here on Thursday, January 5th.
Yeah, well, this is, again, these macro forces, they act either to help or to hinder what we're seeing in equity prices. And you can see equities are on the move lower today, continuing in their no-go trend, and the dollar has bounced a little bit. So remember, the same as with the Treasury rates, when the dollar is rising, sometimes that can cause trouble for the equity markets. And that's what you're seeing here. You're seeing this zero line, which has been resistance for the entirety of this no-go trend, now finally has been broken to the upside. So this gap higher today in the dollar ETF, enough to cause the oscillator to go into positive territory. That tells us that there is some heavy buying going on, enough to cause the oscillator to break into positive territory, which we know shouldn't happen in a healthy no-go trend. So this jump today, a little bit more than what would be typical in a no-go trend.
Absolutely, a threat to that no-go. Let's turn our eye to gold for a second. And I know we've had a lot of investors that were looking for this as a safe haven throughout 2022. Really did no favors to any investors. Where are we at here as we enter 2023? Are we looking at GLD?
This is GLD, yes. And so, it didn't do what many thought it would for most of 2022, but it's perhaps catching up. again, showing that flight to safety if people are a bit worried about the riskier assets. We saw a go trend in November, and then that now has been supported for the rest of the year with the oscillator just about managing to hug that zero line, not getting too far away from it, but hugging the zero line, giving us many go trend continuation icons as price creeps higher. This week, we've seen a new high, and we've seen some separation now between the zero line and the oscillator with, really moving into positive territory at new highs. So gold finally has been repaying some people's trust.
Can we just for curiosity's sake, let's take a look at gold relative to the S&P 500.
Sure.
And we certainly saw that that oil was the trade in the first half of last year. The U.S. dollar being kind of the only trend around in the second half. Here, relative to the S&P 500, we're seeing outperformance. Blue and aqua bars on gold as a relative outperformer to equities. Correct?
Yeah, for the whole month of December, fresh go trend, and then we've been making higher highs and higher lows since then into the beginning of this year.
Fascinating. We're definitely seeing defense on the field from an asset class perspective, but we also want to take a look at equities under the hood. Let's switch it over to a GoNoGo sector Relmap so that we can take a look at all of the individual S&P 500 sector ETFs as they are performing relative to the benchmark index SPY. Seen a lot of rotation throughout last year, and here we are coming into 2023.
Hold on a second, Tyler. Sorry, before we get confused people, I pulled up the wrong one there.
No problem.
We were looking at Canadian sectors there for a minute.
Well, there's nothing wrong with that, Alex.
Nothing wrong with that. No, just wasn't what I expected.
Fantastic. And now we're looking at US equities in the Relmap. So top three sectors really showcasing our growth equities, the technology, consumer discretionary, and communication sectors. That third one shown a little bit of outperformance this week, correct, Alex?
Yeah, the discretionary sector has rallied. No, actually, that's communications. Apologies. The third one is communications. Just to reiterate, technology, discretionary, communications. Those three have been really adding to the woes of the general stock market. But like you just said, communications showing a little bit of outperformance on a relative basis with aqua bars. But you can still see how most of the outperformance is coming from the defensive side of the market. We saw with what we were just talking about with the dollar treasuries and, of course, gold, how that might make sense. You've got this middle band here of financials and industrials, materials, and healthcare, staples, utilities, all outperforming on a relative basis the underlying index.
Absolutely. Let's switch into taking a look at just the sector ETF for utilities, the XLU, which has been a relative outperformer for quite some time here against the benchmark index. Let's take a look at what the price action is telling us. Perhaps not the most exciting sector to be investing in, but for those looking for dividend income as well as some price performance on both a relative and an absolute basis, certainly offering investors something to think about.
Yeah.
Alex, what are you seeing from a trend perspective? It looks like we've just broken out of a max squeeze to the downside. Is that a threat to the go trend here in
Yeah, absolutely. And like you said, like you've said so many times in any kind of presentations or teaching situations, so much of the time it's about getting the sector bet right. And like utilities is not the most exciting. It doesn't capture all the news. But if you've been holding utilities since this go trend, you're actually up rather than being really sort of struggling with the rest of the markets in their no-go trend. Mm-hmm. So small wins perhaps, but still against the weakness that we're seeing in the overall markets. Having said that, as you mentioned quite correctly, we are seeing a breakout of a max squeeze, which, if we know what that means, is telling us that volatility, which has been reduced when you see the oscillator riding the zero line for an extended period of time, we see the climbing grid of the go-no-go squeeze build to its max. When it's broken, now that's telling us that it's broken to the downside into negative territory, which means that there is some negative momentum, some overselling happening, even in the face of a go trend. So yes, it is a slight concern to this go trend. The go trend is in place. It's been moving mostly sideways, and now we're seeing the squeeze broken to the downside. So we'll watch to see if that continues into negative territory or if it reverts back to the zero line as it did here, which would show continued non-directional momentum.
Absolutely. The other sector that was very interestingly moving out of a no-go relative trend into a go and then into a stronger go was the financial sector, the XLF. Let's take a look at that on an individual basis here.
Yeah. And so you can see that, remember, we were talking relative outperformance, and you can see that strength in the most recent time period here, these last week or so. You can really see how prices have rallied. We know that the S&P has not done the same thing, and you can see how the pure no-go trend that had been established has struggled. And we're seeing amber go fish bars now as XLF tries to return to the go trend that it was in much quicker than what we're seeing from the S&P. And you can see that confirmed in the lower panel as the oscillator rode the zero line, but is now breaking out of a squeeze into positive territory. So there's some positive momentum supporting this rally in price, which is causing the GoNoGo trend indicator to struggle to continue to paint no-go bars.
Absolutely. And as we always do, we look at the performance of the sectors and then drill down into performance of individual equities. So a little blind pull here, Alex. Let's pull up a chart of Jefferies, JEF, just to take a look at a financial services company within this sector that's starting to look like a turnaround here and a relative outperformer against the benchmark index. Pretty fascinating gap there on yesterday's bar, correct?
Yeah, that's I haven't looked at this chart over the last couple of days, and that's quite a bar yesterday, opening, close to the previous day, but really the bulls taking some control and pushing that up to new highs. We are seeing that coming off a little bit, but amber bars, two consecutive amber bars, oscillator powered through the zero line yesterday on heavy volume as that happened. So as a trade idea, you may well be looking for this to come back and find support and then move higher, probably in a go trend. So that's an interesting one. We see that real jump. Something happened. Investors really believed in that price movement yesterday. There's obviously some people fading that move. And as it comes back here, we'll see if it finds support and then enters a fresh go trend.
Absolutely. And then let's take a look at one of those individual utilities companies, Chicago-based electric company Excelon, which is a $36 billion electricity company out of the Midwest, certainly pulling the utility sector higher.
Absolutely. So this was the one I think that went out in our Monday report once we were talking about the outperformance from the defensive sectors and in particular utilities. EXC was one that came across because of these recent go trend continuation icons. So you can see here, go trend was identified, and then the oscillator, as that is digested, that movement digested by investors, the oscillator comes back to rest at the zero line, and then it finds support. And you can see that then highlighted in our icons, the go trend continuation icons, the green circles, telling us that momentum is back in the direction of this go trend. And then, of course, we've moved higher since then. So go trend in place, looking fairly strong. We've got a new high this week, and we're looking at the oscillator approaching zero from above. We'll look to see now again, if it gets to zero, will it find support? And will price continue to move higher? But a fairly strong looking chart in this rather large utilities company.
Absolutely. Well, Alex, as always, it's a pleasure talking markets with you. And for everybody who's watching this GoNoGo show here on YouTube, that's great. Make sure you like and subscribe to StockCharts TV on YouTube. You can also check out GoNoGo Charts on YouTube. A lot of longer form educational presentations. Hopefully what you're taking away each week is an idea about how you can do your analysis from a top-down perspective across the asset classes, into the sector groups, and then into individual securities. Yeah. And of course, that complete GoNoGo chart giving you all the tools you need from a technical perspective to manage those trade entries and exits. We also want to encourage you all to check out GoNoGo Research. You can find all of the information about that at GoNoGoCharts.com. Alex,
it's nice to be back. Nice to be back live after the holiday break. So good to see everybody in some fashion, and look forward to next week.
Absolutely. We're with you every Thursday afternoon at 3:30 right here on StockCharts TV. Alex, be well, stay safe, and I'll see you back again next week.
Enjoy the sun.
Thanks.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're going to bring you daily content from an incredible collection of technical analysts and financial experts.